XRP price prediction: is $5 possible in 2026? Latest update. XRP is causing the crypto market to split into two completely opposite camps. One side believes that XRP is still just an overvalued coin that is unlikely to surpass old peaks. But the other thinks that XRP may be facing its biggest opportunity since the lawsuit with the SEC. Hedge funds, XRP-related ETF products, and the expansion of the XRP Ledger are attracting increasing attention from Wall Street. Much of the recent XRP news and Ripple XRP news has focused on these institutional developments rather than short-term price movements. So the most important question is, will XRP really qualify to hit the $5 mark in 2026, or is this just an overly optimistic expectation of the XRP community? In today's video, we'll take a look at the whole picture behind XRP. You will have a clearer view of the possibility of XRP reaching $5. What are the signals that are really worth noting, and not just the stories that are being hyped in the market? If you've been following the latest XRP news today, this analysis may help separate facts from speculation. Let's start exploring now. Crypto Radar. If you just look at the price movement over the last few months, a lot of investors might think that XRP is losing its appeal. After peaking around the $3.4 to $3.6 region during the late 2025 bull run, XRP has been continuously correcting and is currently trading around the $1.1 to $1.2 region. That means the coin has lost more than 60% of its value from its most recent peak. For many new investors entering the market, this is clearly not the image of an asset that is about to explode. However, the history of financial markets often shows that the greatest opportunities arise at a time when the majority of people start to doubt. And the current XRP may be a good example. When looking at the long-term chart from 2022 to now, we will see a completely different picture. For almost 3 years, XRP has been almost stuck in the price zone of $0.3 to $0.8. This is a long period of accumulation where market interest plummeted and many investors lost patience, but then in just the last few months of 2024 and the beginning of 2025, XRP grew by more than 500%, becoming one of the best performing assets in the group of large cap coins. The problem is that such exponential growth spurts can't last forever. After each hot uptrend, the market needs time to absorb the new supply that comes in, while eliminating investors who only participate because of FOMO. That is why the current phase of XRP may not be a long-term downtrend as many people think, but a process of reaccumulation after completing a strong growth cycle. In fact, if you take a closer look at the chart, XRP is still maintaining an important support zone around $1.20. This is an area where buying continues to occur every time the price dips. Although the short-term trend is not really positive, the market has not shown any signs of a sell-off. This is very different from previous crypto crash cycles, when prices regularly pierced key support areas and triggered widespread panic sentiment. What is more interesting is that the price of XRP and what is going on behind the Ripple ecosystem seem to be telling two completely different stories. While the price is correcting, activity on the XRP Ledger continues to expand. The volume of transactions on the network is up sharply from the previous year. The value of tokenized assets on the XRP Ledger is also rising rapidly. Ripple continues to invest in cross-border payment infrastructure, while many financial institutions begin to test the company's blockchain-based solutions. This is a notable phenomenon because in most cases, the price and network activity tend to move in the same direction. When the price drops sharply, network usage also tends to decline, but the current XRP is showing a clear divergence. The price is weakening while the platform indicators continue to improve. And this is probably the most important question right now. If XRP is indeed in a period of reaccumulation rather than weakness, who is buying in? What cash flows are emerging behind the market, and why are so many institutions still interested in XRP despite the sharp price correction from the top? To answer that question, we need to look at what's going on behind the scenes, because most likely the most remarkable story of XRP today is not on the price chart, but in the huge cash flows that are quietly flowing into this ecosystem. Let's find the answer in the next part. If you just look at the price movement, many people can conclude that XRP is going through a difficult period. However, in the financial markets, the price does not always tell the whole story. Sometimes the most important signals appear where the majority of investors are not paying attention, and in the case of Ripple XRP, those signals are coming from institutional cash flows. One of the biggest changes in XRP over the past year has been the emergence of spot ETFs in the US. Previously, the majority of institutional investors who wanted to access XRP had to go through complex investment products or directly hold assets. But now, ETFs have opened a whole new door, allowing traditional capital flows to access XRP news more easily than ever before. It is worth noting that while XRP has corrected sharply from its most recent peak, ETFs have not seen the wave of large-scale withdrawals that many had predicted. In contrast, the latest data shows that in the week ending May 15, 2026, XRP ETFs recorded inflows of $60.5 million, the highest level since the beginning of the year. It is worth noting that this comes in the context of Bitcoin ETFs withdrawing about $1 billion and Ethereum funds losing about $255 million over the same period. In other words, while cash flows are leaving the two largest assets of the crypto market, XRP is one of the few new capital attraction destinations. This is not a phenomenon that lasts for a few days. Since the launch of spot XRP ETFs in November 2025, total net inflows to this group of funds have exceeded $1.4 billion. In May 2026 alone, new inflows reached about $118 million, outpacing the previous month as $81 million and becoming the strongest month for an XRP ETF this year. Many analysts following XRP news today now view this as one of the strongest institutional signals of the year. What makes this data so special is that it comes at a time when the price of XRP is constantly adjusting. Typically, hedge funds will draw the most money when the price is rising and the market sentiment is euphoric. But XRP Crypto is seeing the opposite. The price is falling, but the cash flow continues to come in. That is usually a sign that the market is entering a period of accumulation rather than distribution. This divergence between sentiment and Ripple XRP price performance is attracting increasing attention from institutional investors. Another detail that is also worth noting is that XRP ETFs increased by $35 million, while Bitcoin and Ether funds lost $2 billion at the end of May. The entire month of May 2026 saw almost no days of net capital outflows from XRP ETFs. The funds recorded positive cash flows throughout the month, bringing the total assets held by this ETF group to over $1.12 billion. This is a rare occurrence for an asset that is considered to be weakening. And that leads to a very important question. If the price of XRP is still falling, who is buying? The answer lies in the difference between retail investors and institutional cash flow. Retail investors often buy when prices rise and sell when prices fall. Conversely, large institutions often build positions during suspicious market periods when prices do not fully reflect the changes that are going on behind them. This is why XRP today looks very different from the way most retail investors perceive it. What makes XRP remarkable is that the XRP Ledger is slowly becoming one of the infrastructure of choice for this wave. According to the latest data, the total value of real assets tokenized on the XRP Ledger has surpassed the $3 billion mark. The ecosystem now has nearly 300 active projects and has become one of the fastest growing blockchains in the real asset sector. Notably, Notably, some traditional financial institutions such as Deutsche Bank, Societe Generale, Aviva Investors, or Ondo Finance have started to build a presence on this ecosystem. Much of the recent XRP Ripple news has focused on this rapidly growing tokenization sector. And that's probably what's going on with XRP right now. The price may still be in a period of correction. Market sentiment may still be in doubt. But behind the scenes, ETFs are continuing to suck in capital. Billions of dollars of real assets are being put on the XRP Ledger, and more financial institutions are joining the Ripple ecosystem. The next question is, what is driving all this cash flow? Why are so many institutions willing to bet on XRP at this stage? To answer that, let's explore part 3. In fact, not all cash flows mean the same thing. Some are merely short-term speculation, but others come as the market begins to recognize structural changes that can last for years. And with XRP, there are now 3 major drivers that are being seen as the most important catalysts for the 2026 period. The first motivation came from the development of XRP ETFs and the process of legalizing XRP in the traditional financial system. For many years, XRP has been almost left behind by legal disputes with the SEC. However, after the biggest barriers were gradually removed, financial institutions had a clearer path to access this asset. This has become one of the most important topics in every major XRP update released throughout 2026. Just a few months after spot XRP ETFs appeared in the US, total net inflows to the funds have reached about $1.44 billion, while total assets under management have reached about $1.2 billion. These funds currently hold between 775 million and more than 900 million XRP, or about 1.3% to 1.5% of the market's circulating supply. However, ETFs may just be the surface layer of the story. Much larger momentum is emerging behind and directly related to the future of the XRP Ledger. In the past 2 years or so, tokenization, the process of putting traditional assets such as bonds, hedge funds, real estate, and commodities on the blockchain, has become one of the fastest growing trends in the financial industry. There are currently about 291 active real asset projects on the network, and the XRP Ledger has risen to the world's top blockchains in terms of tokenized asset value. It is worth noting that these are no longer small pilot projects. Ondo Finance is currently putting about $323 million worth of tokenized US government bonds on the XRP Ledger. Ripple, OpenEden, and many other institutions are also expanding their operations on the network. Aviva Investors, which manages around £246 billion in assets, has even announced a partnership with Ripple to promote tokenization solutions on the XRP Ledger. As adoption grows, some analysts believe that the future Ripple price trajectory could become increasingly linked to real-world asset activity on the network. The reason this is important for XRP is that as more assets are added to the XRP Ledger, the demand for the network increases. This is a form of growth based on actual utility rather than just speculation. If the tokenized market continues to expand as many institutions predict, the XRP Ledger could become one of the most profitable financial infrastructures over the next decade. The third motivation comes from RLUSD Ripple's stablecoin. At first glance, many people think that the stablecoin will compete with XRP, but the reality may be quite the opposite. RLUSD is designed to be a stable payment instrument for institutions, while XRP serves as the liquidity layer and bridge asset underneath the system. The more transactions that are made on the XRP Ledger through RLUSD, the demand for the network increases. When combining these three dynamics together, we can see a fairly clear picture. ETFs are expanding XRP's access to traditional investors. The wave of tokenization is is turning the XRP Ledger into an infrastructure for billions of dollars worth of real assets, and RLUSD is creating a new payment layer that is likely to attract financial institutions into the ecosystem. That's why many analysts believe that 2026 could be a pivotal year for XRP, not because of the emotional price predictions on social media, but because of the changes taking place behind the market that for the first time created a growth story based on actual usage demand. Whether viewed through fundamental metrics or XRP technical analysis, the asset appears to be entering one of the most important periods in its history. However, if everything is so positive, why has XRP not yet broken through? And what continues to prevent XRP from returning to its historical peak? And what is expected to be the peak price of XRP in 2026? That's what we need to analyze at the end of this video. After looking at ETF cash flows, the development of the XRP Ledger, the wave of asset tokenization, and the expansion of RLUSD, many people can ask a perfectly reasonable question. If all these positive factors are going on, why has XRP not been able to return to the historical peak zone and break through to higher prices? The answer lies in the fact that the market is not just driven by a growth story. The price of an asset is always the result of a struggle between supply and demand. While demand for XRP is growing in many areas, there are still significant enough headwinds to prevent the price from reacting immediately. The first resistance comes from the supply structure of XRP itself. Unlike Bitcoin, which has an almost completely defined circulating supply, XRP still has tens of billions of tokens in Ripple's escrow system. According to the latest data, approximately 33 to 40 billion XRP are still locked in escrow, and a maximum of 1 billion XRP is unlocked per month on a predetermined schedule. Although the majority of this XRP is often put back into escrow, the market sees this as a potential supply that could put pressure on the price in the future. The second resistance comes from the psychology of the very investors who have held XRP for many years. Unlike Bitcoin, XRP has a huge holder community that has gone through a period of accumulation that lasts from 2021 to 2024. Many of them have bought XRP in the lower $1 zone. That means that even though XRP is currently trading around $1.2 to $1.5, there are still a large number of investors who are making significant profits. Every time the price rebounds sharply, part of this supply is brought to the market to take profits, creating resistance zones that are difficult to overcome. That's why we continue to see XRP struggle every time it gets close to important price zones. The market not only has to absorb new supply from the escrow system, but also has to absorb supply from investors who have been waiting for years to realize profits. However, these same constraints will help us build a more realistic price scenario for XRP in 2026. In a cautious scenario, if ETF growth slows down, tokenization activity fails to meet expectations, and the crypto market as a whole enters a period of weakness, XRP could continue to fluctuate in the $1 to $2 region. This is a scenario where the market still needs more time to absorb supply and wait for the growth momentum to translate into real demand. Medical. In the base scenario, if the ETF continues to attract capital at the current rate, RLUSD expands its market share, and the value of tokenized assets on the XRP Ledger continues to grow. XRP could completely return to the previous peak zone around $3 to $4. At that point, the market will begin to value XRP not only as a payment coin but as part of the infrastructure. The digital financial sector is growing, and in the most optimistic scenario, if institutional cash flows accelerate, ETFs continue to absorb supply, tokenization booms, and the XRP Ledger becomes one of the most widely used blockchains for real assets, the $5 target is no longer an unrealistic number. With a circulating supply of around 57 to 61 billion XRP, a price of $5 would correspond to a capitalization of around $285 to $305 billion. This is a huge number, but not unprecedented in crypto history, especially if the market enters a new bull cycle. So could XRP hit $5 by 2026? The answer is yes, but it's not going to happen just because of social media predictions or community expectations. It will depend on whether the actual demand for XRP continues to grow faster than the supply, and whether Ripple can turn the current opportunities into a true level of application in the financial world. Perhaps the most remarkable thing is not how much XRP is at today. What is remarkable is that for the first time in many years, XRP is possessing more real growth dynamics than mere speculative stories. And that is also why 2026 could be the decisive year for the future of XRP. Do you think XRP will hit the $5 mark in this cycle? Leave your prediction in the comments. If you find the video helpful, don't forget to like and subscribe so you don't miss the latest analysis on XRP, Bitcoin, and the crypto market. Thank you for following and seeing you in the next video.